Okay, so what we're going to do today is we're going to explain very precisely what is meant by the £700 billion that has been given out by the government since the beginning of COVID. So people who've been watching this channel from the start or even in the last few months will be aware that I keep going on and on about this number, £700 billion that's been given out by the government. It's an enormous amount of money. It's £14,000 for every single man or woman in the country. So if you don't have your £14,000, someone else has got it. In my opinion, it's at the heart of this financial crisis. I predicted that because of it, at the very beginning of COVID, I said we would get a cost of living crisis, of inflation, of increasing asset prices, of increasing inequality. So if you understand this £700 billion, I think you can understand a lot of what is happening. It's also a great opportunity to attack the government, ask them where it is, ask them who has it, because it is now held by the richest people in society. But if you're going to do that, you need to understand precisely what it's meant. We've had a few questions by people saying, what exactly is that number? Where did you get it from? And we're going to explain that all very clearly today. So, first of all, what is the £700 billion? The £700 billion is the total government deficit since the beginning of COVID. If anyone doesn't understand these terms, don't worry, because it's going to be explained very clearly. It's the total government deficit since the beginning of COVID, which is also the same as the total increase in government debt since the beginning of COVID, which you can understand as the total amount of money given out since the beginning of COVID. It's a public record number. We'll put a little link to just a public website that shows exactly the government debt so you can see exactly how much it has increased. And what it is it's the total amount of government spending over and above government taxation. So when the government spends money but funds it through taxation, that doesn't increase the amount of money in society. It just moves it around. So if I come to you and I tax you £100 and I use that money to pay school teachers, to pay doctors, to pay nurses, it doesn't increase or decrease money in society. It simply moves it from one person to another. No increase in total amount of money in society. But when the government spends money without taxing, that does increase money in society. And I think it's important to understand how that works. So the first thing to understand is, okay, if they're spending money and they're not getting it from taxation, where are they getting it from? Now that £700 billion has been funded in basically two ways. So 450 billion of the 700 billion has been funded by QE, quantitative easing. That is a term that confuses a lot of people and we will explain it. And the other £250 billion has been borrowed essentially from the private sector, from individuals. And we'll get into that as well. This is more 450 from QE, quantitative easing, and 250 from traditional borrowing. Now let's start with the 450 QE because that confuses a lot of people and it also shows you really neatly how this leads to cash accumulation by individuals in society. So QE, which stands for quantitative easing, is a concept which has confused a lot of people. And I'm going to provide a slightly simplified way of understanding it, which I think helps understand crucially how it affects the economy and society. So I'm going to set forward that when you hear QE, what you should understand is that that is the central bank, in this case, the Bank of England, printing money and lending it to the government. So you should understand that the central bank, Bank of England here, or Federal Reserve in the US, European Central Bank in Europe, prints money and lends it to the government. And this is one way that the government can finance its spending. Now, I'm going to briefly elaborate a little bit on this simplification because I know there'll be people who will be watching who will say, that's not what QE is, that's not how QE works. But if you don't understand this slightly more detailed explanation of QE, what you should keep in your head is that QE is when the central bank prints money and lends it to the government, okay? In actuality, what happens is the government borrows money from the private sector, from individuals, from banks, and at the same time, the central bank buys those loans from the banks. Now, imagine you are the private sector, you are the banks, and the government borrows money from you. The government borrows £100, it gives you an IOU for £100, IOU £100, £110 plus interest in a year's time. Then the Bank of England comes in and buys that IOU from you for £100, or maybe for £101. So you lent money to the government, and then you immediately sold that debt for the same price to the central bank. Effectively, it's as if you weren't there, right? You made the loan to the government, then you got rid of the loan. You're a middleman. And the end result is that the government owes money to the central bank, and the central bank has given money to the government. You see what I'm saying? So technically, the central bank doesn't lend the money directly to the government. There's a middleman in between who basically stands in the middle and takes the money from the central bank and gives it to the government. But that is not particularly relevant for the end result. The end result is the central bank prints money, that money gets lent to the government has the money. So the way you should understand QE is that it is central bank prints money and lends it to the government. Does that make sense? What is useful about this from the perspective of our understanding is because that money has basically been magicked up out of nowhere, it makes it really clear how when the government spends this money, which is runs a deficit, how that increases the amount of money in society, right? So say I'm the government, I borrow money from the central bank, £700 billion, 450 billion pounds. At this point, you're not affected, right? It's just a transaction between the government and the central bank. But when the government then gives that money out, it's brand new, fresh money in society. And 450 billion is created. So it's in the case of the QE, quantitative easing funded deficit, it's really clear how this just leads to increased cash holding in society, right? Couldn't it be clearer, really? The government prints it, it goes through the private sector, but it ends up being lent to the government, and then the government just gives it out. And I think this captures something which we spoke about in last week's video, the What is Money video, which is that the central bank cannot give money out. They can only lend money. But government can give money out. So the central bank lent 450 billion to the government, 450 of the 700, and the government gave that out. And this, at the beginning of COVID, that number was 250. We could see then that it was going to be increased. But it was basically that simple understanding which enabled me to make a lot of money trading at the beginning of COVID, because you could see, okay, the central bank is going to lend 250 billion to the government. The government's going to give 250 billion out. We know someone is going to end up with a ton of cash. Even 250 billion is still £5,000 for every adult in the country, right? So we knew there's going to be a ton of money given out, right? Someone has to have the money. If people have more money, it's going to push up prices. Asset prices will go up. And this is how it was very predictable from the beginning of COVID that, for example, house prices would increase. Now, most mainstream economic pundits were predicting a collapse in house prices. But if you understood, well, the government and the central bank together are giving a ton of money out, we know that actually it's much more likely asset prices will increase. So what is nice about this QE funded money? Even though QE itself can be a bit confusing, and I think you understand now what is meant by QE. Yeah, the central bank prints money and lends it to the government. What is nice about it is it creates a very clean increase in cash holding in society. It's very clean, it's very clear, because that money hasn't come from anywhere. It was printed by the central bank, given to the government, and put out into society. So that's 450 billion of it, and we know now it has to be held by somewhere. It's like if you pour 450 litres of water into a swimming pool, you know that water has to be in there. That money has been poured into society, and somebody has to have it. Somebody has to have it. Nice and easy. One little thing I will add on this is that the central bank pays interest on that money. So even though the government and the central bank between them have created this money, it is still basically interest-bearing debt because the central bank pays the base rate on that money. The base rate has gone up and up, so now the central bank actually has to pay interest rate on that money. Another thing is, this creates an interesting situation where the government owes a lot of money to the central bank. And the central bank is essentially a part of government. So it raises the question of, is this really government debt? And I would say, yes, it should be counted as government debt because the central bank pays interest on it. So you're paying interest on it like any other debt. And technically it is included as part of the government debt. Okay, so 700 billion is the total deficit. 450 billion of that funded by QE. We know that because that's brand new, fresh money that exists in society. Somebody has to have it. It's not complicated. You follow that? The other 250 billion is funded in the more traditional sense of government borrowing. And what that means is borrows money from pension funds, from wealthy individuals. A lot of the time you think you have money in the bank, your bank will actually use that money to buy government bonds and will be holding government bonds. So essentially the money in your bank account is used to buy government bonds. And it's a little bit more complicated to understand now, okay, is society richer now? Because in the case of the QE, it was absolutely brand new money poured into society, okay? Now let's consider what happens if the government borrows 250 billion and then spends it into society. Okay, so imagine your society, okay, and you've got £100. I walk into the room and I borrow that £100 off you and I give you an IOU. Are you richer? Not really. You used to have £100. Now you've got an IOU for £101, say, if we include interest. But then I give the £100 back to you. Are you richer now? See, what makes society richer is not the government borrowing. It's the fact that the government borrowed the money and then gave it back. So if I borrow money from you and then give you the money, then you have the credit and the money. And I think what makes it even neater is often the bank does that basically without you knowing. So you have £100 in the bank. The government comes and borrows £100 from the bank and then gives you the £100 which you put in the bank. So now you have £200 in the bank. So the answer is yes, you're richer. If somebody borrows money from you and then gives that money to you, you are richer because you have the money and the credit. And often all you see is an increase in your bank account because the borrowing goes on by your bank. Your bank lends the money to the government gives the money to you and you are richer. So it's not that complicated really. If somebody borrows money from you, i.e. the government, and then gives you the money, you double your money. Does that make sense to you? It's, and I could do it again, right? You've got £100, I borrow it from you and I give it to you. Now you've got £100 and £100 borrowed, like now £100 also owed to you. Okay, you lend me another £100, I give it to you again, So of course that makes society richer. So basically, the end point here is, no matter how the government funds its borrowing, be it by printing money or by borrowing money from individuals, if the government then gives that money out, society has more money. It's as simple as that. If I borrow money from you or if I print money and give money to you, in both cases, you end up with more money. And it's important to understand that this is not about lending money into the system. And most traditional economists, when you talk about people having more money, they will think about increased lending. This is about giving. This is about the government going into debt and giving money into the system, which means that the rest of society must go into credit and must accumulate money. And if anyone doesn't understand that, I would encourage them to go watch last week's video, What is Money? That explains very, very clearly the monetary system is always in balance in terms of who is in debt and who is in credit. So that's what it is basically. The £700 billion is the total amount of money given out by the government above taxing. If the government taxes and spend, that doesn't increase private money holding, it just moves it around. But if the government prints and spends, or borrows and spends, that does increase money held in society. And it then becomes important, especially if the amount of money is enormous, to understand who is getting that money. So I've said it many times before and I'll say it again. £700 billion is £14,000 for every adult in the country. So if the government has given that amount of money out, whether it's been printed or whether it's been borrowed, the distribution of wealth and the distribution of money in society will have changed enormously. And it's important to understand anyone who has not gotten £14,000 richer, you have effectively gotten poorer because other people have gotten richer. But yeah, that's it. That is the number. The number, we'll put a link in the description so people can see that it's increasing government debt. When the government gives it out, somebody gets it. It's not complicated. And if other people are getting it and not you, that will have social and economic consequences, which we'll go into in the next video. Partly it's funded by QE, and that's nice and simple because in that case it's brand new money. Partly it's funded by borrowing, but in that case as well, it increases money held in society because if somebody borrows money from you and gives it to you, then you have more money. The next couple of videos, we're going to go through, I think, the other couple of important things to understand, which is number one, who actually did get the money. We've covered it many times in the channel, but mainly in the first ever video on the channel, which is 2.5 years ago now. So we've got a lot of new viewers. You might have seen that. So we'll cover that quickly. And then we'll go over basically what are the economic consequences, because I think the way that ripples through society is actually really interesting. But the main point of this video, what is the £700 billion? It is the total government deficit since the beginning of COVID. Part of it's printed, part of it is borrowed, but all of it increases cash holdings in society. It's enough to give £14,000 to every single adult. If you don't have that, somebody has that. We need to know who has it. Okay, I think that's it. Money.